How do you actually know what the market is doing right now? You read 10 articles this morning. Everyone says something different. You watch analysis videos. One says bull run, the next says crash incoming. You check forums, even more noise, and after all that, you still don't know, where's the market really? Here's what I'm going to do in the next 7 minutes. One dashboard, 3 signals, and today, the data is telling a story that the headline number is hiding. Market mood says greed, but the CBOE volatility index just jumped 32% in 4 days. Those two things don't usually move together. Let's find out what's actually going on. Most investors are familiar with CNN's Fear and Greed Index. It's widely used and gives you a general feel for market sentiment. But here's the problem, it only uses 3 signals, and none of them measure market valuation. So it can say greed, while the market is shifting underneath, and you'd have no idea. Invyra's market mood uses 5 signals: momentum, RSI, relative strength index, volatility, market breadth, and critically, the valuation of the entire market versus its intrinsic value. Range 0 to 100, across 5 states from panic to euphoria. Combine that with macro pulse, 5 macroeconomic pillars, and S&P 500 trend, and you have a complete read that would normally take hours of research. Let's go through all 3 right now with today's data, August 23rd. There's a common belief. When the market is fearful, stay away. Sounds cautious, but historical data says the opposite. March 2020, fear and greed hit near zero. The S&P 500 was down 34%. Investors who stepped away to be safe missed a 70% recovery in the next 12 months. 2008, same story. 2022 again. Panic and fear are when quality assets are cheapest relative to their intrinsic value. Euphoria, when everyone is most excited, that's historically when risk is highest. So what does that mean for today, when the mood says greed, but volatility is quietly rising? That's exactly what the data will show us. Market mood today, 60. Greed. CNN Fear and Greed is at 55. Also greed. 4 days ago, both were higher. Something has cooled slightly. Let's go deeper. Momentum, 71. Still strong. The S&P 500 ETF is at $765.72. 70 out of 101 tracked stocks are above their 200-day moving average. Broad participation. The rally isn't collapsing. RSI, relative strength, index, 54. Neutral, not overbought. No technical alarm here. Volatility, 75. This is where it gets interesting. The CBOE volatility index, the VIX, is at 20.0, up from 15.2 just 4 days ago. That's a 32% jump in implied volatility in under a week. The market is getting more nervous, even as the headline mood reads greed. The volatility subscore reflects that, down from 87 to 75. Breadth, 69, solid. Market breadth actually improved slightly. Strength is still distributed across sectors. Valuation, 31. Same as 4 days ago, and still the most important number on this dashboard. The market overall is priced significantly above historical averages relative to intrinsic value. Margin of safety is thin. S&P 500 trend, bullish as of August 23rd. Short term, uptrend. Medium term, uptrend. Long term, uptrend. All 3 time frames still confirm the uptrend. The trend hasn't broken. But the volatility index move is worth watching. Volatility spikes often precede short-term turbulence, even inside longer uptrends. Macro pulse, August 23rd, 10-year Treasury, approximately 4.36%. Stable, neutral. Rates essentially flat. No major bond market pressure. Yield curve, stable. Moderate risk, unchanged. Monitor, don't panic. Credit stress, elevated. The iShares High Yield Corporate Bond ETF, ticker HYG, is at $80, down 2.1%. Corporate bond stress persists. This has been elevated for days, and it's not resolving. Inflation, signal, stable. No escalation, one less risk factor. Gold-silver ratio, approximately 68. Neutral. No strong flight to safety signal yet, but with the volatility index rising, worth keeping an eye on this. This is where today's story really changes. 4 days ago, Sector Compass showed a barbell rotation. Money flowing into both cyclicals and defensive simultaneously, a sign of an opportunistic, selective market. Today it reads, defensive rotation, money moving to safe haven sectors, risk-off environment. That's a meaningful shift in language and in capital flows. Strongest inflows: basic materials, plus 26, healthcare, plus 18, communication services, plus 15, energy, plus 14, financial services, plus 14, technology, plus 13. Outflows: real estate, minus 18, utilities, minus 11. Money is concentrating in quality sectors with pricing power and defensive characteristics. Real estate is getting hit hardest, sensitive to rates and credit conditions, both of which remain under pressure. And on the sector overview, technology is now showing a 52.5% average discount to Invyra's intrinsic value estimates. Industrials at 52.4%, consumer defensive at 35.9%, healthcare at 30.7%. When the broad market is expensive, but individual sectors are at deep discounts. That gap is where the real research opportunity sits. Here's the complete picture on August 23rd. Trend, still bullish. Mood, still greed. But the volatility index jumped 32% in 4 days. Sector rotation shifted from opportunistic to defensive. Credit stress remains elevated. Valuation still at 31. The headline is calm. The internals are beginning to move. This is not a signal to panic. The trend hasn't broken and breath is holding. But it is a signal to be deliberate. If you're already holding, the shift to defensive rotation is worth noting. Sectors with momentum and pricing power, healthcare, energy, financial services, are where capital is flowing. Real estate is losing ground. If you're looking to add, technology and industrials are both sitting at 52% plus discounts to intrinsic value. That's a wide gap. Quality businesses in those sectors are on sale relative to what Invyra's models say they're worth, even as the broad market looks expensive. The market mood says greed, but smart money is quietly rotating to defense. Now you know, before most people notice. This data, market mood, macro pulse, S&P 500 trend, updates every day on Invyra. Link in the description. The numbers shifted meaningfully in just 4 days, worth checking again tomorrow.